Rajat, at Motilal Oswal Securities, what are you communicating to your clients when it comes to the basic understanding of GAR guidelines?
Well, I think as you saw when the budget was presented, the impact of the GAR guidelines started happening into the market as more understanding developed after a week. Since then, we have been seeing that the government has been trying to assure or clarify this last evening's draft guidelines is one step further on that. And then there are further news flows which indicate that the PMO has asked for some more clarifications in this. I think you will continue to see the feedback process continuing for a while before the final guidelines will be out. But for sure the government would try to ensure that as far as the capital market, the FI participants are concerned, there is no source of problem which comes to them as far as this GAR guidelines are concerned.
Based on these guidelines, do you think foreign institutional investors who've been sitting on the sidelines, who always wanted to come to India but the law of the land was not clear, do you think they will make a comeback? Because that's the only thing which I think is of market interest.
Well, I think while GAR guidelines themselves have created some element of uncertainty, there are two other bigger issues which people have been focusing for the last couple of months. First is the currency, because that is very important. The kind of losses that people have seen in currency in the last 6 to 8 months has really compounded the problems as far as FIs are concerned. And secondly, suddenly this new hopes, the ray of hopes which have got raised after the change in guard at the finance ministry. I think if these two things are taken care of, you will see a lot of the investors who are there on the sidelines willing to relook at India, because almost for 3 years the markets are flat. And 18-19p has become like a 12-13p now. Very difficult for markets to bottom out any further from here.
So Rajat, what happens to the markets in the near term, say next 3 months from here? Considering there is positive news flow now coming in from Europe, it seems like the government is sitting up and taking notice of what needs to be done in policy. Of course, a clear guideline and clear direction needs to still be seen. What do you think the market mood is going to be for the next 3 months from here?
I think the range of the market moves up, while the market will still remain in a range, because for it to break out, you will need a renewed optimism on various economic parameters. But we have seen this market remaining in ranges for a long period of time. So I think a very good chance that the range of the market moves up by 10%. And that in itself will be an important source of comfort for investors, because we have been stuck in a pretty low range for a long period of time. So we would still think that the chances of market moving up from here over the next 3 months are a lot more compared to what we saw in the last 3 months.
Why do you think we will break out of this range? Why do you think we will not break down of the range? Because earnings are still fuzzy, valuations are reasonable, they are not very attractive, and the global environment is extremely challenging.
Well, the breakdown of markets from here will only be contingent on an event, not necessarily led by fundamentals, because if you look at the last 10 year, 12 year, generally we have always bottomed out at about 12 times. 12 to 10 always happen whenever you get an event shock, and we cannot predict an event shock at this point. So that's our call, that on its own, market typically tends to bottom out at 12 times. But yes, if you get an event in form of a global shock, then of course in line with respecting the global trends, we will go down. But ignoring that, I think this 12 and a half times is a very, very respectable levels for us to bottom out.
What is a high risk, high return idea? Pick and choose from mid, small or large cap. I'll keep this one open. But one high risk, high return idea which could be a 2x or 3x in the next 3 years.
Well, if you look at the large caps, then I think the 3 best bets at this point of time would be Maruti, L&T and SBI. These 3 are for surely high return ideas from here.
No, but I was looking for a multi-bagger. I mean, L&T cannot be a multi-bagger in next 3 years, I'm sure about that.
Right. I think in multi-baggers then we'll have to narrow down some of the market cap criterias. But if you look at, suppose stock like an Eicher Motor, if you look at some of the mid-cap cement companies, most of them are probably multi-bagging opportunities over the next few years.
Rajat, why SBI, considering there have been a lot of concerns in terms of further deterioration in the asset quality for SBI, and a shocker of a figure has been floating around among some brokerages, and various downgrades as well have been trickling in?
Well, if you look at the figures which have also been doing round, that's about somewhere around 5,000 crores of gross slippage and 3,000 crores of net slippage. I would think that that number is probably in line with what kind of economic environment we are in. We cannot go by the March quarter numbers because that was really an aberration. But prior to that, for 2 quarters in a row, they were reporting a net slippage of 6,000 crores. So from that number coming down to 3,000 crore and stabilizing here itself will give them a quarterly profit run rate of 4,000 crores. And secondly, I think we will see monetary policy easing to accelerate from here given the kind of inflation drop that we can see led by the global commodity fall. These two triggers combined will ensure that from this 2,000-2,100 levels, SBI will be a stock to bet upon.
You don't agree with that brokerage? You came out with a report that SBI could be 1425 because your offices are close to each other, but your thinking process is not aligned.
I have not seen the report yet.
What's the worst case scenario for SBI?
I think again going back closer to the one-time book, which would anyways be anything between 1,800 to 1,900.
If you have to construct a portfolio of only mid-cap stocks for next 3 years, pick up 2 or 3 names for us.
Well, I'll pick up stocks like Mahindra Finance / Yes Bank, pick up a stock within the media pack, for example, something like a Z. You can't call it just a mid-cap, but I'm talking about bottom-up stocks. You have Z. I mentioned about Eicher Motor, companies like Shree Cement. I think some of the pharma names like Ipca, Torrent. You build a nice portfolio of about 8-10 bottom-up stocks. I think they should do fairly well over the next 1 to 2 years.
What makes you hot on Ipca or for that matter pharma? Because pharma stocks are expensive. So your argument that buy value, I don't think it will hold true for pharma, will it?
Well, if you look at stock like Ipca, last 6-7 years they have been growing their earnings very consistently at 20%, and the return ratios have ensured that this is an undiluted profit growth. Next 3-4 years will continue to be in that same range, and it's a top quality company. It trading almost like a mid-cap multiple at about 10-11 times. So the valuations are not expensive and the earnings growth will continue. As far as the pharma pack is concerned, I think some of the large cap pharma which typically gets classified as defensives are necessarily not defensive. They all are bottom-up stories. So a Dr. Reddy story is different from a Sun Pharma or different from a Lupin. So you have to look at each one of them in isolation. And I think some of these stories, if you look at their management guidances, they are 20 to 30% above than what the street is estimating right now. So delivering on the management guidance would itself ensure that the kind of returns you will see will be pretty good on these names.
Rajat, you're pricing in a 10% upside in the near term. What could spoil the party for the market?
Well, again, the two reasons which are giving this optimism. First, if you start seeing the global commodity cycle reversing the trend of decline, which looks unlikely at this point, but that always remains a risk. And secondly, I think this last 1 week has created some optimism or ray of hope as far as Delhi is concerned. The next 2 to 3 weeks will be crucial. We need to maintain this momentum because while the talk has been done, now people would be waiting for the actions to follow.
And if in next 3 to 6 weeks, if you don't get anything positive from New Delhi, do you think markets could go back to from where they started from, December lows?
I think the lower end of the range will again start getting respected. Again earnings season will start. You will start getting more bottom up. You will see how global trends are flowing. But most importantly, we should note that despite all these optimism, etc., markets are still at about 12 to 13 times. So if nothing happens, then this bottom valuation should still hold on.
Okay, let's look at BPCL. BPCL this year is up about 52%. Rajat, what is driving BPCL? I mean, it is a OMC company. Regulatory environment is tough, but BPCL this year is the biggest gainer on the Nifty.
Well, BPCL, the entire gains has been made largely because of the value that you have seen coming from their Mozambique block. Over the last 12 months, the kind of discovery which has happened has led to a significant upgrade in the estimate of the value that one continues to see. And again, I think this is not the end of the trend. You will continue to see this value being much higher. It is very important to get well into that trend rather than estimating what the value could be. And we think that along with the fact that you may be closer to some subsidy reforms this stock can continue to perform even from here.